important use cases will be wholesale on the financial. Here we develop a wholesale CBDC, and let me stress that the URI is completely pioneer. We will have this year, thanks to the so-called Pontes project, a pilot wholesale CBDC, first worldwide. And then we will have a so-called APIA project, more comprehensive, with a European ledger or European network. But let me insist, and I will stop there, Karen, I don't want to be too long, that we still need a two-tier monetary system with public central bank money, which is the anchor, but which also private tokenized currency in euros and not only in dollars. And this is a question of stable coins in euros and or tokenized deposits. The jury is still out. It's up to European banks to develop and to choose. We could have both of them, be it stable coins in euro and tokenized deposits in euro, bank deposits. But if we have none of them, I would be a bit worried about sovereignty. And what I say for the euro area is still more important, as I stressed, for many large emerging economies.
Governor, a terrific scene set, and we'll circle back to some of those topics. But let's hear from Valerie next up, because Euroclear, part of the infrastructure in Europe, you've been looking at pilots tokenizing Eurobonds, the UK gilts, gold with partners. What does tokenization promise to achieve, and how transformative do you think it will be?
Well, I think tokenization is, we see that as an evolution of the financial market, of the financial securities market, in the sense that with tokenization, you will certainly be able to reach out to a bigger range of investors. You will give access to finance to many more people. So when we talk about inclusion, financial inclusion, I think tokenization definitely is part of the game. But I think it's also important for issuers, because if indeed you start reducing the time to market, you start reducing the cost of issuing, I mean, that also, it's a benefit for the issuer side. Having said that, as Governor was saying, the use cases start coming. So I think we started seeing emergence of interest and volumes into the digital assets, especially on the security side. I think we have started an initiative with Banque de France to tokenize the commercial paper in France. I think for me it's a very interesting initiative, because it is the first time that we are really trying to move a full market, a full ecosystem on tokenization. Because today what is very difficult is that you have issuers, for example, who are willing to issue digital assets, but then the investors are not really coming on very fast, you know. So with this project on the commercial paper, it's 300 billion euros, so it's not small, but it is small enough to make sure that we can all learn the lessons and see how we can transpose this initiative in a broader sense.
Bill, let me come to you. You're on the record as saying most transactions will be tokenized by 2028. Are we really 2 years out from sweeping moves towards tokenization for transactions, or was that too optimistic?
I'm not sure I said 2028. I definitely said that the end state is one where most things will settle in digital form, and including real assets, but not everything, of course. We're, I think, at a major inflection point right now. I'm not sure no one was talking about stablecoins a year ago, but clearly it's gathering momentum. It's gathering momentum because we've made the leap in many fronts between the crypto world, where stablecoins are absolutely embedded, and the TradFi or traditional finance or fiat world, where stablecoins and related tokenized instruments are finding their way into the mainstream. I would say so far it's in pilot form in many sandboxes. It's initiatives like the wholesale Euro CBDC. There have been other earlier stages with ECNY, but not really using commercial transactions, the Chinese currency, in the same way. But this is the year when this is happening in scale. And I have no doubt, no less conviction than I did a year ago, that eventually all things will settle in digitized form. How we get there, I don't know. I mean, we as a bank, we're operating in 60 countries on the ground, another 60 that we deal in very actively, and that means we've got 60 plus regulators with 60 different regulatory regimes. So how we get from point A to point B will be heavily influenced by regulation, but it doesn't change the direction of travel.
we can pick up on the regulation point in a moment. In the meantime, Brian, you are one of the biggest advocates for tokenization in the room. You've talked a lot on CNBC about the institutional demand that is coming into the mix. What real-world problem does tokenization solve, and how does it promise to improve the future of finance?
Yeah, well, tokenization solves a lot of problems. I mean, there's an efficiency aspect to it. You can have real-time settlement, lower fees. But maybe the most powerful part of it is just democratization of access to investment in high-quality products. You know, a lot of people have heard about the unbanked. There's actually an unbrokered segment of the world as well. There's about 4 billion adults who don't have access or any ability to invest in high-quality assets, like the U.S. stock market or, you know, real estate or whatever. So what tokenization can do is, it's just like, you know, you have an underlying unit of that asset. You now have a token that's one-to-one representative of that. The first version of this was stablecoins. That's another version of tokenization. So stablecoins have been growing enormously. We're now seeing that happen with U.S. equities, real estate. It'll happen with corporate paper, you know, commodities, like all kinds of things will come on chain. And this is just going to allow the people of the world to participate in this engine of wealth creation, which most of them don't have access to if they're only dependent on their labor for some source of income. So it'll be a great boon for capitalism. It'll create more demand. When we speak with funds like at BlackRock and Apollo, they've said, you know, they want to tokenize every single fund that they have, and they just know that it'll increase demand for their products. So Coinbase launched a product called Coinbase Tokenize, which is helping institutions do this, and we're incredibly bullish on it. If I can make one other point, just to build on what the central bank governor here said earlier, you know, I do think that stablecoins are going to play a major role. I think central bank digital currencies can also play a complementary role. And, you know, people think about our current financial system as kind of sacrosanct and it's the only way to do it. But, you know, if you study the history of money, really, it's got created in like 1971 when Nixon went off the gold standard in the US, and we currently have the system where most central banks don't have any link to a hard commodity underneath. I think fiat currencies are going to continue to exist for a long time, but we're also seeing the birth of a new monetary system that I would call the Bitcoin standard instead of the gold standard. And in the crypto space, that is a return to you know, sound money and something that is inflation resistant, because democracies around the world, once we came off the gold standard, are struggling to balance their budget. They're all running deficits, and it's caused inflation in fiat currencies. And so there is a real segment of the population that is looking for a new system based on hard money.
Brad, on that note, there are lots of sound bites there, lots to respond to. You're already seeing the momentum. First up, tokenized assets on Ripple's XRP ledger surged over 2,200% last year. Just weigh in from your perspective.
Well, I think I agree with a lot of what was said here. You know, I do think the first poster child of tokenization was really stablecoins. You saw, as Brian observed, you know, massive growth last year. I think, you know, went from, in 2024, $19 trillion of transactions on stablecoins. Last year, in 2025, is $33 trillion, so about 75% growth. I think many in our industry would say that's going to continue. I think to the extent there's space between what Brian was just talking about and how I think about the Bitcoin idea of a Bitcoin standard, I look at that and I think it's much more of the marriage. You know, sovereignty of fiat currencies, I believe, is for many countries sacrosanct. Ben Bernanke spoke at a Ripple event many years ago, and he made the point that governments will roll tanks into the street before giving up monetary supply, giving up the control of monetary supply, which stuck with me as, yeah, that makes sense. And so at Ripple, we very much focused on building the bridges between traditional finance, as Bill was describing, you know, what we now call TradFi, and decentralized finance. And that has meant working with a lot of the banks around the world to kind of build those bridges.
Governor, you have to address this. Is the euro in danger from a Bitcoin standard?
No, I'm a bit skeptical, Brian. Sorry to say it about this idea of the Bitcoin standard. We left the gold standard, but the gold was only a technical mean. What is important is what you say, Brad, that monetary policy and money is part of sovereignty. And we live in democracies, and I think the public role is key. And if we lose that, really you lose a key function of democracy. That said, I always keep repeating that money, as long as it exists for centuries, has been a public-private partnership. You need a public anchor, whatever its form is. Remember, silver and gold were sovereign assets, so it was on the public side. And then you had banknotes, and you will have CBDC. But anyway, the most important part of payments is in the private sphere, and this is the development of tokenized private money. But this tokenized private money must be regulated to inspire trust, confidence. And this is another danger we should treat, that tokenization could develop, if not safe enough, financial risk. With the multiplication of stable coins, which are very different, which are fragmented. This is the issue, Bill, you mentioned. And so we must have safe enough regulation. This is MiCA in the euro area. This is now Genius in the US, which is welcome. Because if stable coins are not enough, we could have the risk of a somewhat Gresham's law, you know, this famous one, that the bad currency is more used for transaction and the good currency, which would be CBDC, would be kept for store values. Right. So I think we are on the right track to regulate. We could improve MiCA, still more improve Genius perhaps. And the question of compatibility you raised, we discuss it in the BIS. I happen to chair the BIS. There is a so-called Agora project, and we will discuss it in the G7 in the French presidency. Right. But regulation is not the enemy of innovation. Once more, it's a guarantee of trust.
It's fascinating that you say that. Brian, you mentioned a complementary role that you could play. Is there a complementary role in Europe when there's so much regulation and it is about the digital euro?
Yeah, I actually think these are very positive sum. So crypto just broadly is a technology to update financial services. So it's going to help with stablecoins and tokenized equities and crypto assets and trading. And by the way, borrowing and lending is also getting updated. So I think that crypto is very good for fiat currencies. It's very good. Bitcoin is good as a check and balance on deficit spending, because when there is a lack of trust or people, from like in a U.S. context, if people are worried about inflation, or maybe in places like Argentina or Turkey or Nigeria, they are going to flee to the thing that they believe is going to store value more. So I think in general, it's going to be very complementary. And like you said, I think it comes down to trust. And so if fiat currencies can maintain trust and not have, the money printer kind of debasing everybody, then they'll survive. But if countries that have bad behavior on that dimension, Bitcoin doesn't have a money printer. The supply is fixed, and people will go to it in times of uncertainty, kind of like they did with gold.
The guarantee for trust is independence on central bank side. And we have a core mandate, and we are accountable to that. But sorry to say that I trust more independent central banks with a democratic mandate than private issuers of Bitcoin, which have a very useful role. But
Bitcoin is a decentralized protocol. There's actually no issuer of it. So that's in the sense that central banks have independence. Bitcoin is even more independent. There's no country or company or individual who controls it in the world. And so anyway, I think it's a healthy competition because if people can decide which one they trust more. And I think it's actually the greatest accountability mechanism on deficit spending.
Bill, come in.
Yeah, I'd like to come back on the trust comment. We're talking about the trust in the instrument itself, which is key. And obviously, the trust and sovereignty are two conflicting objectives. And the Bernanke tank point is very real. That's very real. And I'm sure he's right. I'm sure he's right today as well. But there's also trust in the infrastructure. So for a monetary system to be effective, you have to have the instruments that work, and you have to have the pipes that work. And the people who are custodians of the pipes and the people who are the custodians or the market, that's the custodian of the instrument, need to be trusted by the sovereign entities. Unless sovereigns are prepared to give up power and go to a completely decentralized world. But that's not the way it seems to be happening, and I think we'll probably hear about that later today as well, in a very different context. Power matters when it comes to money. So the trusted entities in the financial system today are many. I'll put banks at the center of that, mostly because we've been regulated to the point of extinction in some cases. But we've been regulated aggressively on the back of misdeeds. So there is an embedded trust in the banking system, which is why Standard Chartered has been, I'll say, at the forefront of a few of these initiatives, because we want to parlay the trust that we can bring, we collectively as banks can bring to the system and lever these fantastically powerful new instruments in a complementary way.
There's an element of trust, but there's also an element of momentum. We're seeing it in terms of the swing away to gold, which is now just a momentum trade as trust is eroded. Brad, do you want to come in on this and the element of trust?
Well, I certainly think momentum is a big part of this. And I think, frankly, I personally think the crypto environment and stablecoins included, and even tokenization, but momentum is so much on our side of that direction. And that's partly because you're seeing the US, the largest economy in the world, has been pretty openly hostile towards facets of crypto and blockchain technologies. And that has shifted dramatically, starting with the White House, but certainly, the work that the industry based in the US has come together and helped elect a much more pro-crypto, pro-innovation Congress, and you're seeing that play out. So I think momentum is a big part of this, and continuing to make sure that we're playing into that in a nice way, but also demonstrating real results. Because look, if this is just hype, I think part of the tokenization topic, the main topic today, part of that is like we shouldn't tokenize everything just to tokenize something. There has to be a positive outcome of efficiency or transparency or some of the root benefits of being tokenized. Otherwise, it's just like, okay, it's a nice science experiment.
I'm surprised no one's throwing democratization of the market to me, and that's typically the argument when we have some sort of innovative approach to an asset class. Valerie, do you want to come in on this and the perspective that you have? Because today, as we talk about real-world assets, there is a huge switch towards alternatives, and you're looking at what that means in terms of access to some of those products.
Absolutely. And frankly, coming back on the point on trust, we just wanted also to bounce back on that. I think also as the market mature, people are looking also for, trusted party who can really continue to bring safety for the market. But they're also looking for institutions which are bridging different zones, different pools of liquidity. And this is where a financial market infrastructure starts playing a role, because indeed we need to first see how the market is emerging, but then when we are starting to reach a certain level of maturity, then indeed having a financial market infrastructure which can allow interoperability between different pools of liquidity, but also with the traditional finance, has a lot of value. And to come back on your point about alternatives, it is indeed correct that the market is in search of investment products which are meeting more their needs. Maybe sometimes traditional finance has not evolved sufficiently fast to really attract those investors. And I do see as well tokenization, but also alternative, to be a way to increase the attractiveness of the European capital markets. Typically, we know that we have lots of European savers, but not investors. And having instruments which are really addressing their questions in terms of risk profile, but also in terms of access, ease of access, will certainly be good as well for the European capital market. So alternative tokenization, as you were saying, complementarity between the Bitcoin and the traditional finance, I think all of that, I think, is good for the growth of the financial markets.
The attractiveness of the asset also in some parts comes down to yield. And it's funny, gold's been so attractive, but doesn't pay a yield. There's a fight brewing stateside around regulation, and I know, Brian, you've had issues with the Clarity Act, and now it's stalled thanks to some of your opposition. You've been talking about whether there should be a reward paid for some of these tokenized assets, almost like a dividend. Just explain that notion to us, because the Chinese are pushing ahead with a revamped yuan that pays some sort of a dividend. Why is it necessary, in your view? Is it just pushing the agenda for Coinbase, or is it good for consumers?
Yeah, so the legislation in the US has been making good progress on market structure, and I wouldn't say it's stalled. I'd say there's a good round of negotiation happening, and so I think that that's positive. What we shared publicly was that we want to make sure any crypto legislation in the US does not ban competition for traditional financial services, banks, or traditional securities brokerages. And in our reading of the draft, that's what it did. It actually unfairly penalized crypto companies. We think they should be able to compete on a level playing field. And when there's competition, that's how the consumer benefits. And I think there's very forward-thinking bank CEOs like Bill Winters and others that have just really been leaning into this as an opportunity. They recognize change is You can think of it as a threat, or you can think of it as an opportunity. So the smartest bank CEOs are leaning into this. Some of their lobbying organizations in DC are trying to put their thumb on the scale and ban their competition, which I have zero tolerance for. So we're going to speak up if we ever see that happening. But yeah, I think there's two main reasons why, in this case, the main debate is around stablecoins paying rewards. First, it just puts more money in consumers' pockets, right? So I think people should be able to earn more money on their money, right? That's the high level. It's also about global competitiveness, though, like you said. China did just come out recently and say that their central bank digital currency is going to pay interest, okay? And then there are offshore stablecoins that are actually larger than the US regulated ones right now. And they would love it if US stablecoins were banned from paying rewards because it allows them to flourish offshore. So we need, from a US legislator point of view, they should be ensuring US regulated stablecoins are competitive. Same thing from a European stablecoin point of view. I hope, Eurocoin and et cetera continues to grow. And we're in a global competition. We need to make sure that consumers benefit, and each country puts their interests first.
Governor, to that point, does the digital euro need to pay some sort of an interest?
No, the answer is no. In our case.
Why?
No. Let me explain, perhaps with a somewhat philosophical remark on this apparent opposition between innovation and regulation. Because I'm a bit fed up with this opposition. Let me explain. So this idea that Europe would be only on the regulation side and innovation only in the US, there is an apparent contradiction, I agree. But there is a common purpose in the long run, which is trust, and we mentioned it. Regulation without innovation, I am not interested. I say to the central bankers, it would be status quo, statism, I'm not interested. But innovation without regulation, it could create serious trust issues. Financial crises exist, and they are born sometimes of misleaded or dangerous financial innovations. And financial crises have a very high cost. This is why we need regulation. So I think it's common interest to find the right balance. On this question of remuneration of stable coins and or CBDC, we have a look at the effect on financial stability on the banking system. I don't want to enter the US debate. We see where the interests are. There are also private interests. They are legitimate. But the public purpose should be also to preserve the stability of the financial system. In our case, CBDC, and especially the digital euro, is not intended to attack the banking system and its deposits. So we should be cautious on the transfers. I strongly believe in complementarity on public-private. And this has been the monetary system for centuries. It's a change of technology today, but it's not a change of principle.
Right. Brad, come in on this, because you're the innovator in the room, but you also believe in regulation.
Yeah, I think what's going on in the U.S. right now it is a classic dynamic of when you create new law, it's never going to be perfect. And I think what's the dynamic within the industry and working with Congress has been kind of, I subscribe to the idea that perfection is the enemy of good, and you can't get to perfection. And so I think Brian's exactly right. We're as close as we've ever been in providing that clarity. As some in the room probably know, Ripple lived through a 5-year battle with the U.S. government being sued because of the lack of clarity. So we are very much an advocate of clarity is better than chaos. So look, again, I think Brian's right. We are very close. I don't know if we stalled.
What about the rewards side? Rewards, dividends, interests, is it necessary on stablecoins?
I mean, Ripple doesn't have as much of a dog in that fight as others in the industry. And so there's others that have stronger opinions. It doesn't directly affect Ripple's business as much. I agree in some ways that, look, competition is good. And I agree very much with the idea of level playing field. Now, I also think a level playing field goes two ways, in that crypto companies should be held to standards that banks are, and banks should be held to standards that crypto companies are in order to compete. So I don't think that's a one-way street, that somehow Team Crypto gets to have a certain pass in some way.
Bill, let's hear from the banker in the room. There's pragmatism. You know, money goes where there are returns and where there's the best option. Your bank also operating big corridors across Asia as we talk about digital yuan, as well as in Europe. So how do you see this playing out? Do any of these tokens need to have some sort of an interest-bearing element?
I think if I could be very simplistic about it, I think tokens are going to be used for two things. They'll be used as a medium of exchange. No particular need to bear interest for a medium of exchange because they'll be instantly transmitted, and they'll be used as a store of value. And as a store of value, they're much less interesting if they don't carry a yield. But there will be tokens that are called stablecoins. There'll be tokens that are called tokenized bank deposits, which will probably bear yield, and there will be tokens that are called tokenized money market funds, which will definitely bear yield. That's the whole point. Right now, stablecoins are big and liquid, super. The CBDCs don't exist yet. In a commercial scale. Maybe they will. I hope they will in the right form. And tokenized money market funds, of which we've issued in currencies like Hong Kong dollars, or eventually it'll be CNH, Chinese currency, will exist. And they will be useful as a store of value. And our research estimates, everybody's got their own numbers, and maybe we'll get to $3 trillion of outstanding stock of stablecoins in the next 3 or 4 years. The bulk of that is going to be in developing economies where there's lack of confidence in the local currency, and stablecoins of whatever form, could be Bitcoin, will be used as a store of value. Bitcoin's quite volatile. Everybody knows that the US dollar is the US dollar. You like it, you don't like it, but you know what it is. So that money is going into stablecoins today. It may go into tokenized money market funds in the future if they're available and if they're bearing yield. Frankly, we don't care. As a bank, we don't care. We want our customers to get the best thing for them. So if it's the medium of exchange, we want to provide them with the entry point and the exit point. And we do that today. They like us for it, and we'll keep on doing that. When it comes to store of value, especially in emerging markets, got to be compliant, right? I mean, there's probably a black market transaction someplace that gets that local currency out of the local currency into US dollars. Sometimes it's legit, sometimes it's not. That's always been an issue, and as a bank, we're a policeman. That's our job, is to try to prevent that. Unfortunately, banks don't prevent most financial crime.
Valerie, come in on this, because we've spent all week talking about European competitiveness, and if we're talking about different regulation, different approaches here, is Europe going to be left behind?
I'm an optimistic person, and I'm a European. So, I don't think that Europe will be left aside, but Europe has to accelerate. I think and I think 25 has been a year where everybody realized that there is a need indeed for fair competition, for a level playing field, but also for acceleration in innovation. And I think there is a willingness in Europe to do so. And again, in my field, which is securities business, Euroclear as a global footprint, we have been pioneering on the issuance of digital assets about 4 years ago. We start also seeing the value of tokenization for probably collateral management, because one of the, I think the thing that we are really adding to the financial markets is liquidity. And if you can start, increasing the liquidity, the movement of the collateral management through different pools of liquidity, that will also again benefit the whole capital markets. Right. So to your point, no, I think Europe has to indeed innovate faster, but at the same time, I think there are a number of banks, there are a number of financial market infrastructure, there are a number of players who are definitely willing to be part of that game, and we will be at the rendezvous.
Just a quick one, Brian, before we open up to the audience. Is there a geopolitical element here? We've got so many stablecoins backed by US dollars. You've got the yuan moving at pace as well. The reality of the future, if there's more transactions in both of these currencies bypassing other elements, does that have consequences for the relevance of, say, the euro and other currencies?
I do think that they're in global competition, absolutely. China, US, Europe, going down the list, Japan. I mean, in some ways, Europe is ahead of the US because they passed MiCA legislation. So they have comprehensive crypto legislation, while the US only has about half of it done right now with the Stablecoin Act. And we're now working on market structure. So Europe is ahead, but the vast majority of stablecoins are actually US dollar backed still. And so, when I meet with leaders in the Europe, I basically encourage them to move faster, allow some of these things like rewards on stablecoin, which is different than interest and yield, that would allow them to be globally competitive. So I do think Europe, I'd like to see them move faster on European stablecoins.
Governor?
No, I think on this question of sovereignty and geopolitical balance, first, we are all from advanced economies. And this is perhaps missing in the panel, because this development of tokenization, you mentioned it, Bill, is probably an increasing challenge for some developing countries or emerging economies, because it could mean a full dollarization. Let me put it this way. On the other side, it will bring serious economies, cost savings on the cross-border business. And this is a huge benefit, I hope, for the developing world. But here, obviously, the worry about tokenization is bigger in the South, to put it up. And we had discussion in the G20 by some very important emerging countries, emerging powers, saying we should forbid cryptos, which I think it's not a good solution. We would lose innovation. But be aware there is this issue. If I may add two other points. On your point, Brian, I agree that tokenization is probably an accelerator of the diversification of the monetary system and diversification of currencies. At present, most stablecoins are in dollar for a very simple reason. It's linked to the main use case, which is crypto exchanges. But if we come to financial transactions, and still more to economic transactions, your prediction, Bill, I would be ready to bet for 28 for financial transaction, not less for economic, but we'll see. But if we move to these other use cases, we will have this diversification. Right. And here, infrastructures will matter much. I agree with Valérie. This APIA project I mentioned is really to ID to build an integrated infrastructure in the European market. It will accelerate capital markets union.
Now, we're going to take some questions from the floor. So if you do have a question, just put your hand up and we're going to bring a microphone down to you. Just in the meantime, to our online audience, remember you can get involved. Hashtag WEF26. I think we've got a microphone here in the front. If you want to pitch a question directly to anyone on the panel, please feel free.
Yes. Oh, stand up? Okay. So, hello. Thank you very much. Fantastic panel. My name is Fernando, but the chief economist of a big Brazilian bank. So my point is, what do you think would happen with credit leverage, with duration transformation and monetary policy in a world where stable coins win the game? Let's say it this way. Just would love to hear your views. Thank you.
Governor?
Very simple question. You come from a Brazilian bank. Yes. You said Brazil is a very interesting example where, as you are aware, at present, the Brazilian central bank developed a fast payment system, which is probably the most efficient worldwide, with PIX. And there is now the idea of extending this infrastructure also to a kind of CBDC with drugs. So if stablecoins only win the game, sure, this would mean, it's an extreme case, that money would be completely privatized. I wouldn't be completely reassured, to use a euphemism. We had in the past, again, technology doesn't change the philosophy. We had example in the past where money was completely private, without a serious central bank. Take what existed in the US in the 19th century under your control. And there was no real Fed or central bank. And there were many crises of confidence. So I don't say at all that central bank currency will be dominant, will have a significant market share, but it's an anchor of confidence. Right. And it's why I insist so much on complementarity. I think it's the interest of stable coins to be fully equivalent at par, one-to-one, without fees, right, to a central bank currency.
Brian, coming quickly so we can take another question too.
Yeah, I would just say, in a world where stablecoins grow to that extent, you know, I wouldn't say that they're entirely private money. I mean, in the U.S., at least under the Genius Act, all the stablecoin reserves have to be held in short-term U.S. Treasuries. So they're really backed by U.S. Treasuries, but that privately issued the token. And then I think what will happen is, you mentioned like the transformation or maturation comment. I think that in that world, you're going to have companies that are just have a 100% reserve of people's money held in U.S. Treasuries. There's not going to be a concept of fractional reserve if they don't want to get licensed as a bank, right? And so what does that mean? It means people can earn rewards on those stablecoin balances, But if they want to earn a higher return, the customer can opt in to lending out their money, and that'll have to pay a higher rate than what they could get in short-term U.S. Treasuries. So it actually flips the banking model a little bit on its head.
Right. Another question here.
A much more basic question. Unless I'm mistaken, tokenization built on blockchain technology. Blockchain technology requires compute and electricity. Given the fact that we already have an issue in terms of having enough capacity to cover all the AI that's coming down on us, how are we going to cover all the tokenization that's coming down on us?
Brad, is that one for you?
Sure. I mean, I'll comment briefly. I mean, not all layer one blockchains are created equal. Some use, as you're describing, proof of work. Some use proof of stake. Some use other consensus models. So I wouldn't uniformly put all of the kind of blockchain infrastructure in kind of one power lens. And so I don't think it's as big as a deal. And what you're seeing is most of the activity of stablecoins today is on more power efficient blockchains, either use proof of stake or a consensus mechanism.
Just to add to that, proof of stake uses 99.9% less energy than proof of work,
right?
Which most of the tokenization is happening on Ethereum blockchain, which uses proof of stake.
Another question here.
I'm Aaron Schwarzkopf. I'm the founder of the largest payments company in Latin America that's non-bank. I see a lot of countries in the global south that don't control their own currency. Why haven't they been on chain already? And what do you think needs to happen to move their whole payment infrastructure to the blockchain and perhaps to have stablecoin replace like the dollars they use locally?
Who wants to take that one?
They haven't because of the sovereignty concern. And I think most developing economies are still, not all, obviously there's some examples of countries that have gone entirely digital and they've given up the sovereignty of their currency. Others have accepted dollarization and they've given up the sovereignty of the currency. Most are resisting that for the reasons that the governor mentioned at the outset. So then it just happens through the back door. And you end up with a de facto dollarized system. At Standard Chartered, we operate in many de facto dollarized economies. They work. It's not bad at all, actually. But the government has an extremely important lever of power. These are not typically democracies, although they may be in some cases. But the government loses a lever of power to control the destiny of their people, which typically isn't popular with the people. So, but if it doesn't happen through the front door, it happens through the back door. But the better outcome by far is to have a legitimate monetary regime in the first place that's managed by a legitimate central bank. And obviously, many countries in the world have achieved that, not least the European Central Bank. So no, let's be serious. I mean, like, how many countries have hit their inflation target, consistently over a period of time? I mean, we're struggling with that right now. So anyway, but you guys are experts, and you're dealing.
Can I only add, on a positive note, I completely agree with what Bill just said, that many of these emerging countries and still more developing economies are very innovative in fast payment systems. So they are more on the infrastructure side than the currency side itself. But I'm impressed by the fact that advanced economies are not the most innovative in fast payment system.
Now, let me
PIX is not the only example. Take UPI in India, take South Africa. There are very interesting things happening on the payment systems.
Right. I want to push on to an issue that impacts Western markets, developed markets, emerging markets. If we have more fractional ownership, does that drive speculation? Because we've seen it in many areas where there's fractional ownership. You've seen it in the retail investor getting involved in many places. You actually have an escalation of that asset class. You think about single homes, and there was an announcement recently from the president trying to keep out institutional ownership. And if you put that together, was that a preemptive strike ahead of some of the changes that are coming in tokenization? Brad, do you want to touch on that? Does it provoke more speculation in asset classes, and where does that leave the average owner?
Well, you're choosing the word speculation. I subscribe to Brian Armstrong's comment earlier of like opening up investment access, and investment versus speculation. I put in kind of two different buckets. They both have a purpose, and they both have active market participants. But I think the opportunity around tokenization for certain verticals is, in fact, the democratization of access to investment, less so on the speculation side. I don't know enough about Trump's decision to make steps towards banning institutional investment in residential real estate to comment there. But I do think if you want economic exposure, investment exposure to a commercial building in Miami, and you have, you know, 10,000 US dollars, you can't do that today. And I think opening that up, and I know Brian's example is even better because it's the many billions of adults who don't have any access that, you know, my example is not perfect for that, but you get the point.
Bill?
Look, investments are speculation, two sides of the same coin, versus transparency. So when you have, in a fractionalized world, you'd have much more transparency. Transparency is typically good for systemic stability in the long run, although it can lead to bubbles or bouts of short selling that induce volatility. On balance, I think where we've had nasty financial crises, they've been when there have been problems that some in the market have seen, but couldn't act on and couldn't normalize that. So I would always vote for transparency. Fractionalization should lead to transparency.
Governor, 10 seconds.
No, just to say that yes, to increase access to investment, as you said, but it must go along with increased awareness of risk. And this is the question of advice by the financial industry to their customers and financial literacy. So it should go together. If not, it could be a catastrophe at the end.
Valerie?
I completely agree. I think it's two sides of the same coin. I think it's also according to the risk profile of the people, but access doesn't mean speculation necessarily.
I'll take a different take, which is I think the top 10 fiat currencies of the world will have enough trust to persist, and the next 100 should either get dollarized or replaced by Bitcoin.
And on that note, we are right at time. Thank you so much.
We are definitely missing a developing country.
Thank you so much to our terrific panelists. We do appreciate you weighing in. I think we've all learned a lot about tokenization, so we do appreciate it. Remember to get involved, hashtag WEF26, although I'm not sure if we're still hashtagging anymore. Brad, are we still hashtagging?
We're still hashtagging.
Okay, we're still hashtagging. Thank you so much for joining us.
Wow, that was very fiery. Man, you heard a lot of privatization versus, public versus, the CBDCs, right? So it was just very interesting. Give me one moment to hear what's probably taking place behind closed doors. So I took a lot of notes, and definitely feel free to chime in. Wow. This was really good. Y'all let me know what you think in the chat as well, if you thought that was a really great discussion. Glad we woke up this morning. But yeah, so clearly they had the banks present there, and they were sticking to their guns. And then, of course, you had Brian Armstrong, who was really holding it down for the regular people, for the, regular investors like ourselves, So I definitely respect him for sure. And he was unwavering. So let's talk about it. Let me get up to my notes here. And if you have anything you want to add, definitely feel free to come offline or type in the chat, and we can talk about it. But the first thing, is that they were saying that, stablecoin pilot programs, of course, have been taking place. And I wanted to put this in the chat as well. Let me give you this tracker. Okay. Let me give you this tracker. Here it is right here. I want you to check this out for yourselves now. I'm curious to see if they have finally updated this thing. Because, for a while, they were just like, oh, not updated. Let's see. Go ahead. Let me put this in the chat. Yeah. See, it still looks like they're really haven't updated this thing. Let me share this tab instead. So as you can see right here, one of the bankers, I did not catch his name, but he was from Europe. He was the one who was so anti, rewards on stablecoins. My goodness, right? They don't want us to make any money. But, he was stating that, the stablecoin pilot programs, have happened. I think it was actually the guy at Standard Chartered who was mentioning this. And then he said that this is the year where everything goes full scale. Like 2026 is that year. So there's no more waiting around to, figure out if they are going to proceed. If you remember last October, what's her name? Christine Lagarde of central bank, she's the head of the central bank. She was stating that for the EU, they were trying to decide if they wanted to proceed, with CBDCs. Well, we already know they're going to proceed with CBDCs. A lot of the stuff they already know they're going to proceed with it, but they have to make it seem like they're still researching and doing their due diligence. That has already been done. So, if you come over here, you can always, check out what they have. I've loved looking at this, but I'm just so curious to see if they have it already. So here's the United Kingdom, and it says CBDC status is development. The use case is for retail, okay, which is regular people wholesale. Architecture is immediate, and then a Project Agora. They did mention Project Agora, and I'll get to that in a minute. But once you click on it, you can do this for every country, okay? So it hasn't said launch yet. This development will change to launch once all Europeans are, using the CBDC. But, they're getting very close. All right. Now they'll say the infrastructure is undecided. I believe they already know all of this information. Access undecided. Yeah. Okay. See, because they know that this is a public tracker. So they just don't put everything here. And again, as you can see, they don't really tell you when this was updated. I'm trying to see. Here it goes. January 2025 is the last thing here. So yeah, I think they're closer to this being launched than we know. Currently, they only say 3 are launched. And when you click it, it'll show you who they are. The Bahamas, okay, is launched. They also have Jamaica, which is officially launched with the CBDC. And then lastly, Nigeria is launched, okay? But there's many, many more, in my opinion, that are going to be launched. Give me 1 second. I think they're about to start again. So let me just stop. About to start with another session there. But let me continue. So anyway, that's a really great tracker. So let's look at the pilots. These are supposedly the country and pilots. However, there's more than that, because I personally think most are going to be almost, ready to be launched. They say there's 20 that's in development, okay, which is, really close to being launched. Then they're talking about, that the majority, that there's 36 or whatever that are research. I shouldn't say majority, but 36 that are in research. I highly doubt that. I highly doubt that. You just heard the gentleman today said that 2026 is that year. So, don't let this information online fool you. They are further than you know. All right. So the next thing is, the only thing that they're waiting on, like he stated too, is regulation. He said regulation plays a major factor. Now, he did say 60 plus. He said he had 60 plus financial countries ready to rock. So that says 49 right there. That's in pilot, and then 20. So that's about 69. So maybe close. Maybe these groups of people are ready to rock, right? Once they get the regulation in place. Now, Brad was saying that, everything has to solve a real world problem. We talked about that in our class. That is the new buzz phrase, right? Real world problem, real world solution. These are real dollars. Even RLUSD is real USD. That's what that stands for. The benefits of, the stable coins is, for efficiency, lower fees, real-time settlement. Brian said that there is a gap as well, because everybody always talks about helping the unbanked. These are usually for developing, emerging countries. But I love what Brian said of Coinbase. He said, this is also going to help I'm sorry, we're talking about tokenization. This is also going to help the unbrokered. Okay. When it comes to stable coins, they're saying it's 1-to-1, with a backed up asset. So, they mentioned today about U.S. Treasuries. So they talked about that. But then tokenized products are coming out with real estate, commodities, etc. They're saying that this is going to help, everyday people have access to a wealth engine. And one thing that really frustrates me is from this panel and just from what we've been hearing over the years is that there are a group of individuals out there who do not want, the 8 billion people to have access to the wealth engine, right? And that's very frustrating. But anyways, let's keep going here. So Coinbase actually just came out with a new product called Coinbase Tokenize. So that is really awesome. I'm definitely going to look into that so we can talk more about that in our class. They were just kind of going through the history about money, saying 1971, we were taking off the gold standard, money was created. And they said fiat currency will always still be here. I have to disagree with that. I think that's just something that they are saying collectively to not scare the public, right? But at the end of the day, they want everyone using digital currency. That's the only way that they can have full transparency of what you are doing with your dollars. That's why they're even going that route, because today they don't know what you're doing if you take out $100. And in fact, we talked about this. They're going to start making it in your best interest to use digital currency, because I think they will overlap, initially. But they're going to be penalizing you in a way you can't take out more than $200 out of your account without being scrutinized. They're going to limit you being able to pay with cash at vendors, right? They're probably going to put a law out there, which they've already done. This is not just me talking about this, but if you use China as a case study, right? That's a really great country to use as a case study. Like literally overnight, we were talking about this last June. Overnight, it was on a Monday. Literally overnight, they were penalizing companies if they accepted cash. And so they were taking their licenses away for their businesses if they did that. So if you take away the ability to accept, physical currency, then that means your customers can only pay with digital currency. And they were wanting everyone to pay with their CBDC, with their currencies linked to the CBDC, okay? Because the whole goal is they want to be able to monitor, be able to control, be able to see everything that you're doing. So I just disagree with the whole fiat currency, talking about it'll always be here. I don't think so. Then I thought this was interesting. This was the first time I've heard about this. Of course, we have the gold standard, but they mentioned that there would be a Bitcoin standard. And you heard that there was a little fiery exchange there, right, between the old versus new, those who are more progressive and those who definitely want to stick to the older ways. But, we have known, for a few years that Bitcoin is considered the digital gold. Okay, that's what is considered, the digital gold. So in that instance, yes, it could be considered just like the gold standard. However, those who are really into precious metals, who understand money, they're like, nothing could ever replace real money. Like gold is considered God's money, right? Actual gold that you dig up from the ground. So there is a battle between what really constitutes, money and in what constitutes the actual standard. So when we talk about stablecoins have been increasing. I didn't think I got the numbers right. I want to say it was something, I think Brad said 19 trillion were in stablecoins in 2024, and now it's 27 trillion in 2025. I could be wrong on that second number, but it was 19 trillion in 2024. So they are increasing with the usage of stablecoins. So, one thing they were saying too is that there's just, again, a battle for power. That's why I said people who are not even looking at digital currency right now, I don't know what's going on with them, because there literally are countries right now fighting for the power when it comes to the future of currencies, right? So this is where we're headed. They did say, let's see, democracy is based on gold, silver. Public-private partnership is a must. So again, that was kind of like the older regime who were saying that democracy is going to be based on, what we know, which is more or less the precious metals. And they're also saying that there has to be a trust or a partnership between the public sector and the private sector. Well, from this discussion today, it's going to be interesting to see how that's going to happen, because we've already seen here in the U.S., and I know on the panel we had both Europe and the U.S. It was a little bit confusing when they were talking about the Genius Act in the U.S. and the MiCA over in Europe. So MiCA is their regulatory body in Europe who are, overseeing the regulations of digital currency over there, just like how we have our CFTC body over here who's assisting with that, right? But yeah, so when they're saying that there's supposed to be public and private partnership, from just their conversation today, you see that that's going to be kind of a long road ahead of us for everyone to be on the same page, because they really want to take away the rewards, that everyday people are getting. And I mean, they're really, frankly, rude about it. So trust and confidence, let me keep going with my notes. Trust and confidence is a must. Tokenization could develop non-trust. Okay. And I already told you they had MiCA in Europe. We have the Genius Act here in the US that was passed last summer, which was great. Let's see. Oh, so the one gentleman from Standard Chartered, which is a bank, he was saying the bad currency would be, let me see, bad used for good currency, and CBDC would be used for store of value. So he was saying that what he doesn't want is for people to just have the money that's in a CBDC used as a store of value, and then anything else they want to do as really their truly good currency. He really wants 8 billion people to utilize the CBDC really for everything, not only for a store of value, but for day-to-day transactions. It's crazy. He was even making it sound like, everything. He never said investing or saving, but that's basically everything. Everything is supposed to be CBDC, but as we know, there's no growth opportunity, wealth creating opportunity with CBDCs. It was very interesting. And again, he was in a Bank of International Settlements, has the Agora program, which we just saw with United Nations, that Project Agora is handling the cross-border projects. Okay. So that's handling that. So that's another thing too. You can just come through here and see who's handling what, because everything will tell you on here. Okay. For instance, Ripple, which Brad, he was on the panel today. So for the country Georgia, the technology partner Ripple is handling it. Okay. And look, that's the CBDC. So yes, Ripple is also working on CBDCs. So why? How is that possible? Well, they have the rails to be able to do it, but then also now too, officially, they're now a bank. So you heard him say that they don't really have a dog in a fight, unlike Brian does, in order to keep the rewards, the rewards on stablecoins, because Brad is like, shoot, we're a bank now. It doesn't matter. We win either way. And then I'll get to the questions in a minute. I just want to get through these notes. But yeah, so they said it's a fight on trust. And I said young versus the old, Bitcoin versus precious metals. They also said there must be trust in the infrastructure. And that is true. We've seen a lot of infrastructure, especially when it comes to cloud computing over the last few months, just go down, has been really bad. I know AWS had that massive outage, and it was another one I just can't think of right now. It wasn't Google. But, they have to do better. They have to do a better job with their infrastructure for people to be able to trust it. Because if you have all of your money in a CBDC and everything goes down, then you don't have access to your money. So then they were talking about momentum. They were trying to say, the momentum is there, for CBDCs, but I like how Brad switched and said, momentum is there, for tokenization, is there for digital currency. Oh, I know what they were trying to say. They're trying to say momentum is there for the gold and silver. which we have seen, the prices skyrocket. But that's just due to, in part, because the world is, unstable, right? Because if it wasn't, if the world was stable, no one would really be interested in purchasing those metals. But I like how Brad switched it over to digital assets. And he was like, actually, there's a momentum happening with digital assets. And it is because, like he mentioned before, with our past regulatory body with Gary Gensler, with SEC, it was very negative. The crypto, anything surrounding cryptocurrency was very negative conversation or talks in this country. And now everything is more positive with the pro-crypto administration. So he said the tone on digital assets has shifted. So, and so is the momentum. I think the momentum will really be there once people start to make money, once there's another bull run, once, if we even have another bull run like that, I know some people are saying things are different now. We're not on the 4-year, Bitcoin halving type of way of life anymore, because really last year should have been an amazing year for all investors, for all crypto investors, but it didn't happen. So, I think the market is maturing. It is also finding its new foundation, and because everything is changing now, especially with the regulations coming in. We never had regulations before ever in crypto. There's going to be a new standard. There's going to be rules of the road. And so, only those mature and also cryptos that actually solve a real world, problem, they have an actual use case, will thrive. So once those particular cryptos start to make, money for regular day people who are invested in those cryptos, then I think you will see, from a retail standpoint, more excitement. When they're talking about momentum, they're talking about the financial institutions are pumped up, fired up. They've been pumped up and fired up because they know where we're headed. Regular people really don't know where we're headed. They're not even paying attention to this conversation. So I appreciate everyone who joined us early this morning at 3:15. You guys are amazing. And that's what sets you apart from 8 billion people. Because again, you're thinking like a financial institution, and therefore your momentum is off the charts, and you're gonna thrive, right? So financial institutions, yes, their momentum has been high and it keeps increasing. Far as retail, I don't really see that happening as we continue to receive liquidations, and also with the markets being unstable due to a lot of geopolitical events that's happening, that's also bringing down the markets. Once the markets start to rally, yes, I will agree that more momentum will happen on that end. And then maybe that can help, retail start to trust, these other entities there. At this point, they don't really have a lot of trust, But anyways, in regards to democratization, let's see here. Let me look at my notes that they said here. It was just a really great conversation. So I believe it was the lady. I don't know where she was from though, but she was saying interoperability is a must. And that is true. That was something they really didn't talk about in this session, but I've heard it in other sessions for sure. It's not about having individual islands. No man is an island. No company is an island. All islands will need to be interconnected, working together, open source, right? So that's going to be for all companies going forward, So that's why they were saying privacy is dead, right? Because we are moving into a more open source world, an interoperable world. And so she did speak about that once we have that interoperability, that's going to help create the trust, because people now will be able to work with other partners, right? And everything will be transparent. So let's look at the alternatives. Let's see here. It says European captive markets get more investors, too many savers. Oh, wow. That's so funny. It's so funny when people say there's too many savers. I'm sure maybe from an economic standpoint, yes, they want people to spend, right? That's how we create, help out the economy, right? But at the end of the day, right now, especially in the US, a lot of people probably wish they did save more, especially if they lost their job and and haven't been able to get one in 6 months to a year, it probably would have helped them to save more. So at the end of the day, they really don't want people, at least for Europe, they don't want too many savers like they have. Another reason why they want to, one reason why they are pro tokenization. And, they gave that example of if you had $10,000 and wanted to invest in a commercial building in Miami, like you really couldn't do that today. However, once we are able to tokenize real estate, commercial real estate, which actually that is already happening. I like how they're saying like this stuff is not happening. It's already happening, guys. Stuff like this is already happening. It's probably not happening at the full scale like they want, that they know is coming, because they know what's coming. I'm talking about trillions of dollars, quadrillions of dollars is coming to this market. Okay. It's just the amount of money and wealth that's coming it's unfathomable, right? So that's why you have to get it now. But basically, it'll just be every day soon where you can just invest in your neighbor's house if you wanted to. You can invest in their car. They may tokenize their automobile. They may tokenize an amusement park that you go to every summer with your children. Like everything is about to be on chain. Everything is about to be tokenized. So much wealth is going to come into play. So going back to the attractiveness of the yield, because that is the fight right now on Capitol Hill. So of course, Brian, let's see here. Attractiveness of the yield. Reward paid for tokenized asset. Brian, let me see. I can't read my notes. Brian does not ban competition for crypto companies compete. So basically he was saying that the yields actually help, companies compete on a level playing field, right? So these banks don't want to compete. A lot of banks don't want to compete. They just want to keep, with the old way in this new world. And for me, I'm kind of like, no, that's old. That's dead. We need to move on into this new world. But that's what they want. They don't want any type of yield, on any of their products. Let's see here. So yeah, push for CBDC. They do not want to offer yield to consumers at all. And so, of course, supposedly, in the US, we are not having a CBDC, which is, central bank digital currencies, which is, everything controlled by a central bank. It's supposed to be just stable coins where, again, it's, by private companies, the ownership is with private companies. And they're trying to say that they're different. Well, that's the only difference. One is private. The other one is, by the government. But at the end of the day, don't get it twisted, you guys. These stable coins can be managed the exact same way, right? They are all ran on smart contracts. If someone disagrees with what you're saying, they could literally write in code to turn your funds on or off. All right. So, and then of course, everything is on chain so they can see all of your transactions, especially once we start to integrate, with the carbon credits and everything like that. If you're eating too much meat or drinking too much wine or, just all these unhealthy life choices, like they can turn it off to where if you go to a grocery store and you want to purchase a steak for the weekend, they'll say, nope, sorry, you've already met your consumption limit, for the month, and you won't be able to purchase that. So all of this is going to be interconnected, along with digital tracking. Let's see here. Tokens, medium of exchange, store of value. Yep, that's what tokens are. Stable coins. Okay, so here we go. So when it comes to stable coins, it's two things that they do. They could be a medium of exchange, right? Where you're actually purchasing items with your tokens, or they can be a store of value. The banks and CBDCs, right? They do not want you to receive yields on what they say is for a medium of exchange or store of value. Okay. They basically were like, no, we're not interested in that. And that's where the fight is on Capitol Hill. So it sounds to me like Brian is saying rewards on stable coins instead of yields, right? Because they're saying, as you heard today, Let's see, developing countries not interested in paying yields. Well, so this is interesting to me. So on tokenized bank deposits, we already have bank deposits right now, and we barely get anything for it. They want to continue that cycle on. So whereas Brian actually wants you to get, some yield, if you park your money at a particular bank, right? They're like, nah, we don't like that. And one thing I thought was very condescending is how they were saying that developing countries are not interested in yield. I was like, well, actually, they would be interested in yield if they knew that that was an option. They're going to actually try to kill the yields before they bring it public, so the public will never know about it. So how can they be upset about something that they never known? And that was something that I've already talked to you guys before about some of the conferences I've attended in the past, where this one gentleman from Africa, which was very condescending, he was just like, when it comes to their CBDC over there and having, credit cards linked to it, he was just like, oh yeah, people don't want to. He was talking about all Africans, like, how many countries in Africa, how many Africans are in Africa? He was like, oh yeah, nobody wants to use, this for investing, or for retirement. They just want to be able to pay their light bill or get movie tickets. And I just thought that was so condescending, It's just like, how come when it comes to, certain countries, or in today's case, they said developing countries, that they're just not interested in this product. They don't even know about it. They would be if they knew about it, so they're going to get rid of the opportunity before the opportunity could even be presented to these people. You know what I mean? So anyway, it's a little frustrating on how negative we treat people. But and then even with tokenized market funds, so of course they do currently give interest on market funds. So that was the only area where they're saying it possibly is a yield, but again, that's not going to be for everyday people. Most everyday people do not have a market account. They will have a tokenized market account fund, tokenized market fund, but that still won't be for everyday people, right? All right, let's keep going. I'm almost done, you all. Then I'll get to the questions. So they said instead of all of that, the banks were like, when it comes to banking, no yields. But they were like, if people really wanted to make money, then they just need to invest in Bitcoin to grow their money. Well, that sounds real cute, to say, but people who are just investing in Bitcoin still aren't going to make any money. Why do I say that, Nicole? Bitcoin is already, it dropped. Of course, it's dropped now, you guys. It's like, I don't even know what it is right now, maybe 88,000. It did drop below 90,000. It doesn't matter. No, most regular people do not have $88,000 for one Bitcoin. So if they're putting $100 into it, it's just a fraction of a fraction of a fraction of a fraction. So what if Bitcoin goes up to 150,000? Like, that's hardly any money. Like, that's not like life-changing wealth. You know what I mean? Like, oh my gosh, great. Bitcoin's $500,000 now. Man, I can retire. No, you're not. If you just bought like $100 of it, right? So again, these people being very condescending because they know that most people will never create wealth like that. Also, there's not that much Bitcoin even left remaining, right? And then the people who do own the most Bitcoin are countries now. We just saw how our country went into Venezuela and captured their Bitcoin. So countries now, and it's supposed to be originally been all about decentralization, getting away from the government, but most governments now own a lot of Bitcoin. And then, of course, you have financial institutions that own a lot of Bitcoin. Then after that, it'll be, the billionaires and then the multimillionaires who own Bitcoin. And then there's everyone else. Okay. So it was just very interesting how he's like, oh, yeah, just, go ahead and invest in Bitcoin. And really, a lot of people who invest in Bitcoin today in emerging countries or developing countries, they're using it for day-to-day transactions because their current currency is not stable. For instance, we can look at Iran, right, with the real. It just crashed. Same thing with Japan. Their yen just crashed. So those who are using Bitcoin to do day-to-day transactions are still able to function, right? It's not like, oh, I'm using this for savings and everything else like that. So that's, I'm getting on my little soapbox about that. But let's see here. But one thing they did highlight here, let's see. with Standard Chartered. Here we go. Give me one moment. So again, it's a battle of private versus public ownership. That's the battle that's happening right now when it comes to money. Who is going to control all this money? And of course, it's going to be mostly, as you can see from here on this screen here. I can stop sharing my screen. It's going to be mostly CBDCs, right? It's going to be mostly public, central banks. Stablecoins will still be used private, but I think that's going to be a second runner-up. Let's see here. Then these were just get into the questions now that some people had, about the energy, which is a really great question because most people are not thinking about the energy consumption or even water consumption that it takes to be able to facilitate all of these transactions around the world. But they did answer him and they said there's different mechanisms, right? Like proof of work, proof of stake. They did say that the proof of stake mechanism for the stable coins, right, use 99% less power than proof of work. So, that all sounds great, but, until we actually put real numbers to see what that really looks like when it comes to energy, it's just kind of just something just kind of talking, right? Oh, 99%, that sounds like a big number. But what does that really mean, So that's something I would like to research a little bit more. And let's see here, even with the water too, even with the water, I would love to research how much water this is taking up to run these engines. Let's see here. So one thing that they did, finally gave some kudos, to some of the smaller markets at the end after being condescending to everybody. They did mention that South Africa, India, and Brazil are doing great things in the payment markets. And it was funny that they said that because that's really BRICS. The only one missing is what, Russia? Yeah. So basically, of course, those three are going to be doing fantastic because they're a part of BRICS. But anyway, they're doing great things in the payment markets versus the US and Europe. So yeah, US and Europe, just due to regulations, they're just moving slower. And that's just kind of like common sense anyway. When you're smaller, you're more nimble. You can move quickly, right? When you're larger, when a company or a country is larger, it moves slower because there's more bottlenecks, more avenues that they have to cross first before things can actually get implemented. So yeah, so South Africa, India, and Brazil are off to a great start for their countries. All right, and then just kind of wrapping everything up, they're just saying, fractionalization creates more transparency. They want to open up investment access. And they're saying that Brad was saying that it's not mostly speculation around tokenization anymore, right? It's still a little bit, I think, until we fully get into it. But at the end of the day, we have companies right now that you can, invest in if you wanted to invest in tokenized assets. So yeah, it's a real thing now. It's not as a speculative asset as it used to be. And this was interesting here, what Brian said when he was closing it out. And of course, remember, he's with Coinbase. He was saying, let's see, there's the top 10 currencies. And he says the next 100 gets dollarized and replaced by Bitcoin. So that was very interesting how he closed that session out. But just let me know what you thought of that session. Did you learn anything new? Do you have a preference if you're for CBDCs or stable coins, if you're for our future money to be controlled by governments or by private companies? Just how do you feel about it? I'll open the floor if anyone has any questions or would like to add anything. Awesome. I don't see any questions online. I don't have any here in the chat. So what we'll do is we'll go ahead and end the session, and we'll come back at 7 a.m. for the presidential address. All right, we'll see y'all soon. Thanks for joining us.